No niin, ei muuta kuin tervetuloa tänne, jos on nyt vaikka syksyiseen Helsinkiin, eli S-Pankki-webinaari jälleen vuorossa. Ollaan näitä kuukausia tässä pidetty ja kiinnostusta on ollut paljon, niin sen mukaan mennään. Ja jälleen kerran meillä on mielenkiintoinen syksy käsillä. Mä olen Lippo Suominen, päästrategina täällä S-Pankissa, ollut näissä aika paljon mukana. Tänäänkin täällä vähän juttelemassa asiantuntijoiden kanssa. Eli meillä on sitten mukana Ilona Karppinen, joka hoitaa meillä private assetteja ja vaihtoehtoisten sijoitusten puolta, mutta mikä meillä on ensikertaisesti käytössä, on yhteys tuonne rapakon taakse suureen maailmaan ja mitä kaikkea muuta tuohon voisi keksiä. Eli tämän voisi sanoa, että kesän ja syksyn hittituotekin meillä on ollut Global Private Assets, ja sitähän hoidetaan tuolta Amerikasta käsin, eli meillä on tänään yhteys tuonne Philadelphiaan, siellä Ryan sitten tulee esittelemään meille tuotetta paremmin ja päästään vähän niin kuin suoraan tekijän suusta kuulemaan, että mitä siihen kuuluu. Ja lisäksi meillä on tuolla linjoilla mahdollista myöskin ottaa yhteyttä tuonne Rainer Kobleriin, joka on Hamilton Lanein tämän talon asiantuntija myöskin täällä Euroopan päässä, mutta palataan niihin kohtaan. Eli ensiksi toivotan Ilona täältä tervetulleeksi, koska puhutaan vielä nyt Suomeen tähän alkuun. Miten Ilonan syksy on lähtenyt liikenteeseen?
No, kiitos Lippo, oikein mukavasti ja tiedetään täällä muun muassa juuri tämän rahaston tiimoilta ja on ollut kiva nähdä sijoittajat ottaneet oikein hyvin.
Hyvä. Kohta tästä sitten tosiaan lisää. Sen verran muistutuksen alkuun. Tämä nauhoitetaan. Tämä on jälkikatsottamista sitten, koska kaikki ei valitettavasti pääse suoraan lähetykseen mukaan. Mutta teillä, jotka olette täällä suorassa lähetyksessä mukana, on tietysti se hillitön etu, että saatte esittää kysymyksiä. Eli kysymyksiä voi esittää mulle, Ilonalle, Michaelille ja Rainerille tässä näin. Eli kaikki, mitä olette halunneet tietää Global Private Assetsista, nyt kannattaa kysyä, koska näin hyviä vastauksia, että aikaisemmin olette tähän saa. Mutta ajateltiin, että otetaan alkuun kuitenkin tämmöinen pieni syyskatsaus tuolta noin, eli mitä markkinoille yleisesti ottaen kuuluu, koska meillä on aika vaikka mielenkiintoinen syksy jälleen kerran ollut tässä näin. Eli kaiken kaikkiaan tämä vuosi on ollut sijoittajille jälleen kerran ehdotonta juhla-aikaa. Tuotot on ollut erinomaisia, siksi on ollut hyvä olla sijoittajana täällä näin. Maailman osakkeet on tänä vuonna noussut lähes 20%, eli taas on se riski, että me tulee vauhtisokeus tässä näin. No, ehkä lohdutuksena tähän sitten voi sanoa, että onneksi ei ole pelkkää nousua. No, ehkä se ei ole onneksi, mutta nyt ollaan nähty, että syksyllä meno on vähän hyytynyt, ei mitään isoa laskua, mutta tasaantumista tuossa noin pikku vaikka oireilua tuolla markkinoilla. Siitä me ollaan varoiteltu, siksi me ollaan oltu nyt selkeästi varovaisempia tässä syksyllä, mutta kyllähän tuolla on tosiaan mielenkiintoisia asioita liikenteessä sijoittajan kannalta, ja niistä ajattelin tässä nyt ihan lyhyesti muutamalla kalvolla puhua. Eli tämä syksy on tosiaan selkeästi epävarmempaa aikaa. Ja yleisesti ottaen me ollaan sitä mieltä, että se tosi vahvan nousun aika, jossa niin saatiin jatkuvasti tätä hurjan hyvää tuottoa osakkeista, niin siellä on varmastikin nyt tullut tiensä päähän. Ollaan siirtymässä enemmän tämmöiseen pomppuilevaan aikaan. Jos osakkeet menee ylös, osakkeet menee alas, saadaan varmaan kohtuullisia tuottoja, mutta ei enää tuommoista riemujuhlaa, mikä tuolla on ollut. Ja nyt otettava se syksyn sijoitussanaan esille, eli se, mistä mekin tässä on puhuttu ja mistä markkinat puhuu, on stagflaatio. Jälleen kerran, tämmöisenä 70-luvulla syntyneenä, että kiva mennä sinne lappujen takaisin. Että itse en ehkä hirveästi stagflaatiosta puhunut 70-luvulla, mutta se oli edellinen kerta, kun siitä puhuttiin. Ja siksi ei välttämättä ihan tuttu sana kaikille. Niinpä otin ihan superasiantuntijalta eli Wikipediasta määritelmän. Pohjimmiltaan kysymys on siitä, että talouskasvu on vähän heikkoa, mutta samaan aikaan meillä on reipas inflaatio. Tämä on aika poikkeuksellista, jos tosiaan ajatellaan, että siitä on 4-50 vuotta sen kerran ollaan tämmöisessä tilanteessa oltu. En sano, että me nyt mennään välttämättä, mutta riskit on olemassa. Ja mistä se riski sitten tulee? No ensinnäkin meillä on nyt hurjan hyvä talouden kasvuaika takana. Tuossa kuvassa näkyy, miten talous on kehittynyt eri maissa, Yhdysvalloissa, euroalueella, Suomessa. Nähdään se romahdus, nähdään se tosi vahva nousu sieltä. Ja nyt ollaan siirtymässä siihen vaiheeseen, jossa se ei enää mennä niin kovaa ylöspäin. Tosi hyvä kasvu on ollut, jatkossakin on kasvua, mutta hitaammin kuin tähän asti. Mutta tämä on sitten se, mikä tekee tämän stagflaatiokäsityksen tähän näin. Eli samaan aikaan, kun me ollaan siirtymässä vaiheessa, jossa talous hidastuu, niin meillä on inflaatio kiinni. Ja tosiaan tämmöisiä inflaatiokiinniä me ei ole ihan vähän nähtykään euroalueella, varsinkaan euroalueella, mutta myöskään Yhdysvalloissa. Ollaan selkeästi yli niiden tavoitetasoja, mitä tuolla on ollut. Eli nyt sijoittajat vähän niin kuin arpoo tällä hetkellä, että mihin tämä on kääntymässä. Puhutaan yleisesti, että inflaatio on väliaikaista, ja todennäköisesti suurta osalta se onkin, mutta onko siellä myös rakenteellisia asioita taustalla? Ja jos on, niin niillä on aika monipuolinen vaikutus tuohon markkinoihin. Nyt inflaatio vaikuttaa tuolla sijoittajiin montaa kautta osakemarkkinoista. Ensimmäinen asia, mikä taas täytyy muistaa, että meillä on yrityksillä mennyt erittäin hyvin. Yritysten tuotot on ollut äärimmäisen hyviä. Tuossa näkyy, miten tämän vuoden tuloskasvu odotus maailman osakkeille on mennyt, tuo tummempi viiva tuolla ylhäällä. Tänä vuonna yritysten tulokset kasvaa lähes 50%. Poikkeuksellisen hurja kasvu. Mutta se alempi viiva näyttää, että ensi vuodelle odotetaan enää alle 10% kasvua. Odotetaan, että se kasvu on normaalistuu. Ja siellä yksi taas tekijä taustalla on se, että yritysten kustannukset nousee inflaation myötä. Kustannukset nousee ensin, sitten vasta myyntihintoihin sitä viedään läpi. Tämä ei ole hyvä uutinen osakesijoittajan kannalta sinänsä. No mistä inflaatiosta muualla tuttuu? No itse asiassa meillä itse kullakin. Tuossa kun mennään bensapumppulla, kun maksetaan sitä sähkölaskua, käydään kaupassa, maksetaan vuokria. Hinnat on noussut. Nyt se ongelma on se, että jos meidän palkka ei ole noussut, ei ole vielä tullut joulua pomolta, että niin kuin lisää liksaa on tulossa, niin nyt se on siihen, että me maksetaan enemmän niistä samoista asioista. Ja tässä odotetaan, että kuluttajat menisi hirmu hyvin, me noustaan koronasta. Mutta me ollaan itse asiassa siitä tilanteessa, että luottamus Yhdysvalloista on lähtenyt laskuun. Kun se hinnat on noussut, meillä on vähän varaa käyttää muihin asioihin. Ja kolmas asia, inflaatio nyt sitten tuntuu on se, että me ollaan eletty aika elvytyksen varassa. Keskuspankki on riittänyt, korot nollissa, osakkeet on hallittu. Jos inflaatio nousee, on pakko vähentää sitä elvytystä. Ja se on ollut iso veturi tähän osakkeiden nousuun. Nämä kaikki on asioissa, jotka on murroskohdassa. Eli ei enää niin hyvin mene kuin aikaisemmin. Ei se ole vielä niin heikoksi kääntymässä. Nyt sijoittajat vähän kipuilevat tämän kanssa, että mitä on seuraavassa lupassa. Tämä aiheuttaa sen, että tämä syksy on tosiaan paljon arvaamattomuutta aikaa kuin tähän asti on ollut. Eli paisumpia tuotteja enemmän heilutaan. Tässä näin joudutaan vähän enemmän vaihtelemaan sitä meidän näkemystä osakkeisiin. Edelleenkin osakkeet on se mielenkiintoisempi pidemmällä tähtäimellä kuin korot. Korot pysyy alhaalla, mutta ei sieltä osakkeestakaan enää semmoisia loistotuotteja tule, mitä tähän asti on tullut. Ja siinä on vähän niin kuin tiivistettynä tuo markkinatunnelmat ja markkinanäkymät tässä näin, mitä on ollut. Ja Ilona, kun tätäkin tapahtuu olla asiakkaita, niin mitä siellä on asiakkaat itse mieltä tässä tilanteessa ollut, kun ollaan nähty osakkeessa niin hyvät tuotot sisällä, korosta ei saa mitään, mihin sitä rahaa sitten laitetaan?
No kyllä se on se $1000 kysymys tällä hetkellä, mutta oikeastaan niin kun katseet kääntyy, jolle ei ole kääntynyt jo, niin viimeistään tässä vaiheessa sinne vaihtoehtoista ja sijoituksen puolelle. Ja oikeastaan tämä niin kun ajatus on erinomainen. Se nyt sitten päivän puheenjohtajalle, eli tälle S-Pankki Global Private Assetsille, joka sitten sijoittaa listaamattomiin osakkeisiin ja lainoihin.
No, tämä ei tosiaan ollut ihan tapahtunut siltä tähän rakenteeseen. Kyllähän tämä vähän näin on. Että kun on ollut hienoa osakkeisiin, nousua on tullut paljon, nyt osakkeita on paljon siellä salkussa. Nyt vähän kaikki että no mihin sitten seuraavassa sitä rahaa laitetaan. Ja kyllähän tässä on etsitty näitä vaihtoehtoja. Ja kyllä se niin kuin näkyy siinä, että se kiinnostus tämmöisiin kaikkiin muihin ihan perinteisiin, niihin lisättyihin osakkeisiin, korkomarkkinoihin, niin se on kyllä nyt kasvanut. Ja tämä varmaan nyt aika hyvin vastaa sitten siihen kysymykseen, että mihin sitten tätä katseita kannattaa laittaa.
No kyllä mielestäni kannattaa, ja tietysti on ehkä sitten se puoli, että sijoittajat edelleen haluaa kuitenkin tuottoa. Niin sitä on niin tässä kuvassa, että hajauttavia vaihtoehtoja on ja sitten muitakin, mutta että yhtä hyviä tavallaan kombinaatioita vähän matalammasta markkinariskistä ja hyvästä tuotosta, niin niitä on vaikea löytää. Eli siinä tämä on kyllä ihan.
No kerrosta nyt ihan suomeksi tähän ensin, ennen kuin siirrytään laittoon Michaelille, niin siitä, että mistä tässä nyt on kysymys?
Joo, eli tässä näkyykin meidän kansille rahaston presentaatiosta, ja tässä jo oikeastaan on aika paljon asiaa. Eli tuotteen nimi on S-Pankki Global Private Assets ja erikoissijoitusrahasto se rakenne, ja sillä on tässä yhteydessä merkitys, koska yleensä tämmöiset pääomasijoitustyyppiset tuotteet on suljettuja rahastoja. Ja nyt meillä on tässä käsissä rahasto, joka on sijoittajien kannalta hyvin yksinkertainen ja josta pääsee ulos ja jonne pääsee sisään niin kuin kuukausittain, mikä on hyvinkin niin kuin, tavallaan näistä uniikkia, mutta hyvin niin kuin harvinaista. Ja sen lisäksi kohderyhmä on hieman laajempi kuin mitä private equity-rahastoissa yleensä, ja private equityllä tarkoitaan siis pääomarahastoja, niin minimimerkintä on 125 000 euroa, ja sitten myöskin se, että myös perehtyneet ja kokeneet ei-ammattimaiset sijoittajat pääsevät.
No joo, katsotaan sitä pikkusen enemmän vielä S-Pankin GPA, kun toi tuttavalle nimi kuuluu.
Joo, eli todella GPA. Ja yksi syy siihen, että nimi on valittu näin, niin siinä on tietty syy, eli tämä strategia on meillä toteutettu niin, että tässä on sitä toteuttamassa Hamilton Lane, joka on yksi maailman suurimmista pääomarahastoyhtiöistä ja pääomasijoitusalan asiantuntijayhtiöistä. Ja heillä on sitten täällä S-Pankissa tämmöinen erikoissijoitusrahasto, joka kerää sitten varoja sijoittajilta ja sijoittaa sitten edelleen tähän Hamilton Lanen saman nimiseen, eli Global Private Assets -rahasto. Ja siellä sitten kuullaan kohta lisää, mitä kertoo tästä sijoitusstrategiasta ja miten sitä toteutetaan siellä Hamilton Lanella. Ja meillä sitten on tämmöinen niin sanottu syöttörahasto, joka ainoa elämän tehtävä oikeastaan on sijoittaa tähän Hamilton Lanen GPA-rahastoon. Ja tässä näkyy nyt kuvassa se, että noin 99% rahaston varoista on tällä hetkellä sijoitettuna sinne Hamilton Lanen GPA:han kassassa noin prosentti. Ja kuvassa itse asiassa näkyy se niin kuin äärimmäinen tilanne, jossa on maksimimäärä käteistä ja minimimäärä sitä kohderahastosijoitusta, mutta tosiaan niin todellisuudessa niin 99% on siis sijoitettu sinne Hamilton Lanen GPA:han. Ja tämä, minkä takia näin, niin luonnollisesti ei haluta laimentaa sijoittajan tuottoja turhaan. Ja rahastolla on myös pieni rahoituslimitti, joka ei ole, vaan se on käytetty väline.
No miten toi on lähtenyt liikkeelle sitten tämä rahasto, joka tuli keväällä täällä?
Joo, itse asiassa rahaston elämänkaari alkoi kesäkuun alussa, eli meillä ei montaa kuukautta vielä ollut takana, mutta rahaston keräys alkoi mainiosti ja muutenkin oikeastaan edelleen niin kiinnostus hyvällä tasolla sijoittajien puolelta ja sitten tämä tuottopuoli taas, niin siitä meillä on niin kuin 2 kuukauden tuottoluvut nyt tiedossa ja ensimmäinen kuukausi oli heinäkuu lievästi minusta ja seuraavaksi sitten elokuu, jolla tuotto on ollut reilut 3%, eli erinomainen. Sen voi ehkä sanoa tästä tuotoista, että tuottotavoite tällä rahastolla on 11% vuodessa, ja se on kyllä, niin kuin kohta kuullaan Michaelin toimesta, niin on viime aikoina niin aika paljon parempi. Mutta markkinatilannekin on ollut erittäin hyvä. Sitten tässä on vähän pääomien kehityksestä. Siellä on 27 miljoonaa euroa tällä hetkellä ja sijoittajakunta on hajautunut. Siellä on sekä yksityissijoittajia, sijoitusyhtiöitä, säätiöitä, pieniä instituutioita ja sitten merkittävä määrä myöskin vakuutuskuorien kautta sijoittavia asiakkaita. Ja kyllä tämä kiinnostus on edelleen niin kuin oikein hyvällä tasolla. Odotus on, että merkintöjen virta jatkuu hyvänä.
No mikä siinä, kun on hyvä tuote, niin kai silloin kysyntääkin on. Mutta nyt se hetki, jota kaikki on odottanut, eli toimiiko meidän tekniikka on nyt se iso kysymys tässä kohtaa. Eli otetaan yhteys sinne Yhdysvaltain puolelle, eli hello Michael, are you there?
Yes, I am. Is everyone ready for me?
Well, we were so excited to see if the techniques will work, and so it sounds very good at the moment. So, if you shortly present yourself.
Yes, absolutely. So I'm very excited to be here, everyone. Thanks for having me. I am Michael Ryanin. I work with Hamilton Lane out of our offices in the US. And I'm here this afternoon to discuss the opportunity in private equity and how we capture it in our Global Private Assets Fund in GPA. I'm the portfolio manager of the fund, and this fund offers private markets in a monthly subscription, monthly redemption vehicle. And so it is more accessible than a lot of the traditional private market vehicles. We have on this a target return across cycles of 10 to 12% per year. But in fact, in the 2.5 years to date, we've actually been above that so far. So over the next 15 minutes, let me define private markets. Let me talk a bit about what makes them attractive in our view. I'll talk a bit about Hamilton Lane and how we manage this fund, and then go into an example of a company in the portfolio. Now, when we talk about private equity or private markets, of course, we're referring to purchases of equity or debt in companies that aren't listed on a stock exchange. And so this could be buying into a formerly family-owned company or privately held company. It could be buying a division out of a larger listed firm and turning that into its own company, or even buying an entire company off of the stock exchange in a take-private transaction. And it's not just investing in established companies, right? We're also providing growth capital for an earlier stage of company in a fast-growing industry. And you can see here on the page some examples of companies that are either private today or have been private at one part in their development. As I was listening to the first part of the presentation, my thoughts kept coming to this company here, Duolingo, which is a company that provides an app to learn a foreign language. And so I think maybe I will become a client of Duolingo, and next quarter I will be able to present to everyone in Finnish. But that is my goal, at least.
We look forward to that.
Yes, we do.
But in terms of why this is attractive, not only are these different companies and different exposures than you can get in the public markets, but the investors in this area, the pension plans, the insurance companies, the endowments, have been able to outperform opportunities in the listed market over the last 20 years. And so even though it can be more challenging to invest in this area, it has been very rewarding for the institutions who've been able to do it. And it's only recently that groups like Hamilton Lane have made private equity accessible more broadly through vehicles like the Global Private Assets Fund. When I talk about this premium return, it's important to think through, where is this coming from? What aspects of the private markets make it possible to get these excess returns? And I like to show the distinctions between how we operate in the private markets versus in the public markets. Now, in the public markets, of course, you've got a limited group of companies that are listed. The information about those companies is available to everyone. And the shareholders are relatively passive. They're not able to drive the strategy or the management of the firm. And so while public market investing is good because you can capture the growth of the overall economy. You can capture exposure to some of these largest companies. As we know, it can be very hard for an individual investor or even an asset manager to markets. An investor has to go out and find these companies and create an opportunity to invest. And once we've done that, the transaction is driven by an investor called a general partner or a GP. And the GP becomes the largest shareholder in the company and can drive the strategy and the management philosophy of those firms. And the GPs, they are in the whole business of buying companies and building up assets that someone else will want to buy in 3 to 5 years. And that is their whole model. It turns out that if you approach a company with that mindset, what will the next owner want in 3 years, and how should I invest my attention and my capital? You can build very strong companies along the way. And of course, once you've built that strong company, you need, as the general partner, to find the buyer willing to pay the most down the road, whether that is public market investors, an IPO, whether it's a strategic investor who wants to buy this as a division of the company, or it could even be another financial sponsor who wants to keep the company together. But the key here is that this tool set, this opportunity that's not available to public market investors, is really key to how private equity can perform well in all weather. Now, not only are there opportunities for the lead investor to add value, but importantly, there are more investment targets in the private markets than we see in the public markets. So here we look at data just from the US among companies with more than 100 million in revenue. And for every one company that you have like this in the listed markets, you have more than 8 companies in the private markets. And so the opportunity set is vast. But historically, it has been hard for most investors to access this opportunity. It's really been limited just to the largest institutions. And I can talk a bit about why that is. Now, because these companies are not accessible to be buying into every day on the stock market, historically, institutions have not been offered monthly subscription and monthly redemption. Rather, the institution would have to commit to a new private equity fund before any investments have been made, and that it would have to fund that commitment over 3 to 5 years as individual companies are purchased. Not only that, once you funded that commitment, you're locked into that investment until the underlying companies are sold. And that can be as much as 10 years or even more. And that is just how you access a single fund. If you want to build a diversified portfolio of private equity, you need to do this a number of times with a number of managers around the world. And so with this vehicle, GPA, we're taking advantage of all the attributes of private equity, but also the advantages of Hamilton Lane and the platform that we've built. And we're able to get the monthly inflows deployed into an attractive portfolio of private assets, get all the advantages of that return premium without locking our investors in for 10 years. So if an investor situation changes, we have the ability to rebalance over time as the need changes. Let me just talk a bit about Hamilton Lane and how we're able to deploy this fund successfully. We're a company that's a bit over 30 years old, and for most of our existence, we've been working with the largest institutions around the world to build out their private equity portfolios and to solve some of their challenges in integrating private equity into their portfolios of other assets. And not only with large institutions, but we've also developed funds looking at different specialized opportunities for mid-sized investors around the world. Important to point out about Hamilton Lane, not only are we one of the largest investors in the private markets and one of the largest sources of capital for this kind of transaction, we are also ourselves a listed firm, and we are listed on the NASDAQ. And that means for our new clients who may not know us as well, there's a whole lot of information that's available just through what we are providing to our regulators and providing to our shareholders, so people can really get to know us. Let me talk a bit about our position in the private equity landscape. I talked about the GPs, the general partners who are the lead investors in these transactions. It's important to point out that Hamilton Lane itself is not a GP, but rather we are partnering with these leading general partners around the world. And so we're able to look at the groups that are very strong in different strategies, in different industries, different geographies. And we're able to participate in their transactions alongside them. Our clients, as I mentioned, are the institutions, the endowments, the wealthy families who are deploying capital into private equity, and we're working with them to solve their needs and to build portfolios that work for them. Now, in constructing this business, as I've mentioned, we are one of the largest investors in the private markets, which means we are the most important client for many of the GPs with which we work, and that contains several advantages. Not only do we have the opportunity to invest in these 10-year locked up funds, what we call primary partnerships in private equity, but we also have the opportunity to buy out other investors' stakes in those funds midway through their life, as well as to invest directly in these transactions. And this is really key to how we're able to make global private assets. So in the Global Private Assets Fund, because we're taking in money on a monthly basis and we have the ability to redeem investors out as their situations changes, we're not putting any capital in these brand new primary partnerships. We're not locking any capital up for 10 years. What we are doing is investing in what's called the secondary market. So if another investor backed a primary partnership 5 years ago, and they need to get their capital out, we may have the opportunity to buy that stake in an illiquid private transaction and step into that investor's shoes. And so the advantages of that from our standpoint is that we're not locked up for 10 years. We're actually much closer to the exit of those companies. So it is shorter duration. We are able to look at a portfolio that's already built and analyze the transactions in there. And in many cases, we are able to buy this at a discount to where the fair value of the portfolio is. That comes to the benefit of our investors. Not only that, we're able to invest directly into the equity and credit of some of these private companies alongside the lead general partners. And so the advantage is there is we're able to target companies that are a good fit for our portfolio, but are also in the lead general partners area of expertise, their sectors, their geographies, their relationships. Not only that, because we're not going through their fund, we are not paying the full management fee and carry that is going to that manager. And so it becomes a very fee efficient way for our investors to access private markets. And it is shorter duration because the expected hold period can be anywhere from 2 years to 5 years rather than locking capital up in those primary partnerships for 10 years. Let's talk about how that comes together into the GPA fund that we've built today. And here you see the results of the portfolio that we built. We've done over 100 transactions in this vehicle, and because many of them are diversified portfolios, we actually have exposure to over 700 underlying private companies. And that is the portfolio that an investor buys into today in the GPA fund. What we set out to do here is to build a portfolio that provides investors with the best of the private markets, but still allows them to buy in on a monthly basis and redeem out if the investor's needs change. So the investments that we've targeted are very cash efficient. They are shorter duration than we typically see, and they are fee efficient so that we're economizing in how we invest the capital. We have built this as though it could be an investor's single exposure to private equity globally, even though in some cases our investors are in this fund and they are doing other targeted investments with GPs on their own. And here you see the financial performance of that portfolio. I mentioned earlier that we are targeting 10 to 12% annual returns over the course of the cycle, but of course we've been able to exceed that in the current environment. We launched the fund 2.5 years ago, initially with a US dollar share class, which you see up top. And then early last year, as investors wanted euro denominated exposure, we set up the euro share class, which has 70% of the underlying exposure hedged back to euros for our European investors looking to reduce currency volatility. As you can see, even though the investment that the fund has been successful, has raised over $1 billion to date, we have been able to get that deployed into our high quality transactions with the results that you've seen above. In terms of how we are distributing the fund, while Hamilton Lane is managing it, we are partnering with groups like S-Bank around the world that have good investor relationships in their local market and are distributing this as an alternative to their clients. Now, let me give you some flavor about the types of transactions that we're doing in the GPA fund and the ways in which we are able to perform strongly in all weather. What you see here is a company that we invested in early last year called Zyfin. Now, this is a company that sells a software package for to manage the billing for healthcare providers. So if you are a patient in the United States and you get your blood drawn for a medical test, or you have some other healthcare laboratory test, Zyfin is the software that the laboratory uses or the doctor's office uses to submit the billing, right? They'll calculate how much it costs. They will submit a claim to the healthcare insurance company, and this software will coordinate the collection of payment. And not only is this a highly technical and specialized and regulated activity, but it's also very important to the healthcare provider. This is how these small businesses get paid. And with this platform, those laboratories, those doctors' offices can increase the rate of the cash that they collect for their services. They can reduce the risk that an insurance company, a health insurer, will deny a claim because it wasn't processed correctly. And they can reduce the amount of time that their office workers are spending on trying to collect these bills. Now, in Zyfin, we saw in this company a market leader in what is a very specialized space. And what we liked in this small company, it's about a 350 million enterprise value company, so much smaller than most of the companies listed on the stock exchange. We liked that it was a leader in a niche space. We liked that it had very strong cash flow and had a very profitable product. Now, our partner in this transaction is Avista Capital Partners, and they are a specialist in healthcare investing. And in particular, they've invested in a number of companies in the US laboratory space. So some of the other investments of Avista are actually customers of Zyfin, and they had firsthand experience with this product. And in fact, Avista is one of Hamilton Lane's close relationships. We've done a number of investments with them over the years. Now you see over here on the left-hand side some statistics about the valuation. So what it does say here is that we purchased it at about 12 times the cash flow for the company. But remember, this is a software company. This is a company with relatively high margins. And not only that, it's growing at over 10% per year. And you don't see valuations like that for companies growing this quickly every day in this environment, and certainly not in the listed markets. But the real driver for return, and really the value creation plan, if you will, for this investment, is that the general partner intends to invest in the company to continue to grow new customer relationships, to develop not only the doctor's offices and the small independent labs that they work with, but also sell to larger customers, like whole hospital groups that are dealing with a large volume of billing. Not only that, they're looking to sell additional products and services to their existing customer base and cross-sell activities. And they're looking to acquire small companies in a similar business so that they could then sell those products to their existing base. Now, we closed on this transaction in February of 2020. So this was right before COVID hit the United States and the lockdowns really hit the entire world. And while initially the stay-at-home orders hurt this company because people weren't going to the doctor's office or they weren't going to the blood lab unless they absolutely needed to, ultimately this has been a benefit for the company as people have had to go back and get those routine tests and to get the service that they needed. So in the year and a half that Avista and we have owned this company, it's been able to grow cash flow from about $30 million to about $50 million. And because of that growth, the company's been able to refinance the debt on its balance sheet and to borrow additional proceeds to pay a dividend to shareholders. So what that means for our fund, we've already received back half of our cost in the company. And because the company has grown profitability, it's now valued at twice what we paid last year. And because the company is progressing well, because everything's going according to plan, this company could be positioned for a sale either to a larger software company or even an IPO on the public markets sometime as early as next year. And that's just one example about how this fund is accessing the private markets. With that, I'll turn it back to you, Lippo and Ilona, to see if there were any follow-ups or questions.
Sure. Thanks a lot, Michael. Very interesting. First of all, to all the Finnish customers and listeners, you can ask questions. So you have the box there, just right there, either in English or in Finnish. We can take either one. Michael can't, but we can. But there are some already. But to be honest, I will start here. It kind of sounds too good to be true. That okay, you are kind of gaining all the good things from private assets, but you are not missing on the big problem that has always been there is illiquidity. And there should be some liquidity premium. That's what people said. That's why you invest in private equity, but you don't seem to have that. I like the structure to kind of frame it that, but it's so easy. Are there other funds that are doing the same?
So yeah, no, I think it's a very astute question, and I will say it is not easy to do this. Most of the
make it sound easy.
I just make it sound easy because we do all the work. We do all the work to bring this access to clients. We are able to do this because we are the largest investor in the global private markets, because we've been working with different groups to customize private equity for their needs for over 3 decades, and because we have this volume of deal flow around the world. Most groups are not set up to take money in on a monthly basis and deploy it into 3, 4, 5 transactions around the world in a month, right? Most groups out there might be doing 3 to 5 transactions in the private markets in a year. And so it's really just because of our scale and our experience that we're able to do it. Frankly, also, the private markets have been evolving over time. They are bigger than they were before, and there are different types of transactions today than there were 10 or even 5 years ago. And because we're very active in all these areas, we have a good sense of what fits well into a fund like this. There are a couple of other groups that have tried vehicles like this. I think some of them have struggled and challenged when they get money in on a monthly basis. Sometimes the cash sits there for a long time, and that can reduce their return. But because of our deal flow, we've been able to get this fund deployed even as subscriptions have come in.
So it's the economic of scale that's really helping you there, and making kind of unique there from this point of view.
It is the scale, and frankly, a lot of strong investors out there have been able to build successful businesses on the institutional side, and they're not interested in solving problems for other investors. We do have a mindset of how can we solve problems for other investors, and so we've invested in what is required to build a fund like this and to provide the advantages to a broader base of investors.
Okay, going back to your presentation, I was shocked about this number of private companies in the US. We only talk that US is more than half of equity markets, kind of listed equity markets in the world. But it seems that it's a small market that we are talking about there. This kind of private market, what's the ownership structure there? Is it family companies, or is it other private equity companies, or who owns those companies?
Sure. So there is a broad spectrum. So many of these are founder-owned or family-owned companies owned by management teams. Some are owned by other financial sponsors, or maybe even a group of local investors. Important to point out that very often the exposure that you're getting, the types of companies you're looking like here, are very different from the ones that are dominating the listed indices. If you look at the US listed market, you're going to have maybe 20% of the overall value in a US listed equity index in just 10 companies. And they are concentrated in the technology and financial services area. So if you're buying a US listed index, it's going to be very concentrated in terms of types of companies that you're buying. And what you see in the private markets, it's not companies like Facebook, it's not companies like Microsoft, it's a company like Zyfin that is meeting a very specific need for a very specific type of company and doing it very well, right? It is companies that are in the business services space that are providing useful activities. It can be software companies that are meeting more limited needs, or even consumer companies that have more niche products that are successful in their areas. And because they don't have to have a $10 billion valuation in the public markets, they can do a couple of things very well and be very successful private companies.
Okay. So seems to be lots of opportunities still left, although often people talk that how much it has grown the market there. But well, there's room to grow. There's a question people here in Finland ask a lot about this ESG. So how is that ESG side there? It's very important for S-Pankki, but I hope it is important for you as well.
Oh, it's absolutely. It's important to all of our clients, and it has been important to us for a very long time. And so we've been pushing industry initiatives, and we've been pushing ourselves to implement that into our process for over a decade. We've been involved in the United Nations Principles for Responsible Investing, or PRI, and we've been members of that since 2008. And they rate us as an asset manager about how good a job we are doing in these ESG areas, and we've received an A+ rating for our efforts in this space. As it relates to our investment activities, we're looking at every transaction and every portfolio that we invest in through this lens of ESG. How is it impacting all of those things? And for the private assets, Global Private Assets Fund in particular, there are certain things that we will not touch, right? We are not going to go into unconventional armaments or munitions. We're not investing in tobacco companies or companies focused on pornography, or if they have any of their products made anywhere in the world by child labor. And if there are other things that are a level above that, things that might be having a significant negative impact on the economy, things that are deriving all of their income from gambling, we really have to take a very close look and say, do we and our clients really want to be investing in those? And is the exposure to that area significant enough? And so we have dedicated ESG committees with oversight on all our investment decisions and making sure that that is applied to the portfolios we manage, like GPA.
How easy is it on private markets? Kind of on listed markets, you have these ratings from S&P and so on the ESG ratings, but on private side, you probably don't. So you have to do all the work yourself.
It is more challenging. You're right. So, in the public markets, we talked about, everyone has the same information. Everyone does reporting in a standardized way. And that means that for the, couple thousand companies in the US that fall into that group, there can be a standardized rating. If you look at the 8 times as many that are in the private markets that have different reporting criteria, that is a bit more challenging. And so just like in other areas of the private markets, Hamilton Lane is looking to be a leader in that as well. We've recently announced a partnership with a group called Novata, which is going to work with some of these private market companies in standardizing their reporting and developing not just a rating, but the ability for investors like Hamilton Lane and our clients to make their own decisions about what's most important to them in ESG and to target their portfolios appropriately. We're not yet where we ultimately want to be, but we're making the investments today to make sure that we can get there.
Okay, yes, interesting question. Now the history is very much on this bull markets. Equities have been rallying. So how will private assets do when markets are more shower, when it's not only going up? Is there risk there? Of course there are risks, but kind of how do you deal with that?
Yes, so you're absolutely right that over the last couple of years, it has been largely a bull market, even though we were interrupted a little bit there by COVID early last year. What we've seen over our history and across the cycle is that the same tools that lead investors are using in the private markets, the control over the capital structure, the strategy, the ability to pivot as circumstances changed, if anything, they've led to more outperformance of the public markets in a bear market than in a robust bull market. And so certainly if we see economic challenges, those are going to hit public equities, and they will hit our companies as well. But because of the tools that we have in the private markets toolbox, that is some of the things that allow us to outperform in all weathers. And so I showed the returns historically, over that 20-year period, and a lot of that outperformance of the public equities was actually coming in areas that were more challenging because of the advantages private equity brings.
Ilona, when you present this to customers, what are the main worries that customers have? Is it that the markets could be going down, or is it the liquidity, or what is the main question that you often get?
Well, I think the limited history is probably one of the questions. And obviously our feeder has only a couple of months behind. So that's probably one of the worries. We obviously present kind of the lane GPA's numbers and also the history and kind of very consistent performance over cycles.
So, well, that's easy one to assume for Michael, because you just show the long history there to tackle that one.
It is, and important to point out, Hamilton Lane, while this fund is new and we've been able to develop this because of the scale that we've achieved, we've been investing in each of these areas, in secondaries, in co-investment, direct equity, and in direct credit for over 15 years. And what I've really enjoyed about working with Ilona and her team is that they're not just looking at the monthly performance of this vehicle, they're looking at the longer track record of our overall team and our history of managing in other vehicles. And they've understood the private markets and the way that we approach them, and have seen this as a good opportunity for the bank's clients going forward. And I think that certainly shows a willingness to do some more work on the part of S-Bank than maybe some other groups out there, and a thoughtfulness in that approach to do that work.
Yeah, so you can tackle all the questions. Then another question here on this is very much US focused. How different are private equity markets or private asset markets in different continents?
Certainly. So yes, what we've seen is that the private markets in the US have a bit of a longer history. They have more general partners and more companies that are open to that. But increasingly over the last 20 years, we've seen developments of them not only in Europe, but increasingly in Asia and other parts of the world as well. The investing environment is very different in different countries and in different continents. And so it's key that someone who is really good at doing a buyout investment in the United States may not be as good at doing a growth investment in Northern Europe or in a turnaround investment in Asia. And so what that means for us is that we are partnering with different managers around the world, different lead investors who have the specialties, not just in the different sectors, but also in the local business environments and the legal environments that are in effect. And what we've seen is that the opportunities that present themselves in the US, there may be a different type of company or different type of market that are attractive in the private markets in Europe, or what we might see in Asia. And it's really important to be partnered with experts in each of those geographies in those investments.
You have seen that the markets are growing everywhere, basically, because in the US you have a long history, in Europe we don't have that long.
There is a history in Europe. I will say certainly there have been managers successfully doing private equity in Europe for a long time. In Europe, we do see a little bit more attachment to the family-owned, multi-generational companies that stay family-owned, or companies that are willing to go public at a smaller size. Whereas what we've seen in the US is a much more openness more broadly to selling a company to a private equity manager and to companies who are willing to stay private, even as they achieve a size of $3 billion, $4 billion, $5 billion without feeling like they need to list when they get to that size.
There's a very nice question on your investing style or strategy. How long do you invest to a company that does not grow, and do you exit bad investments? So how do you decide on whether to stay on or not?
Sure. So with every investment that we come into it, that they have different attributes. Some of them are going to make their return by growing their revenues and by increasing profitability. And some of them actually have other ways that they can do it, whether it's by reducing cost, whether it's by buying in at a very low valuation and then paying out dividends over time. When we're investing in the equity of a company, we're targeting a 3 to 5 year hold period. And our general partner is putting together a plan for the management team and for the execution of the company about how that value is going to grow over time. Sometimes those plans are executed faster than we expect, and we're able to exit in year 2 or year 3. But of course, sometimes it does run into difficulties. And when it does run into difficulties, we make sure that we are in very close contact with the lead investor, the general partner there, in terms of what is going on in the company, what has changed in the market, and what the plan is to remediate that. If we feel like we're able to fix the challenge over a year or 2, then certainly we'll work with the lead general partner to do that. But in some cases, there are companies where the industry has changed, or the revenue has gone away and we don't expect it to come back quickly. And in those cases, we're actually better off selling it at as attractive a price as we can get and redeploying that capital in other areas. So really, that 3 to 5 year hold period is the target. If we end up going longer than that, it's really because we have an additional plan to improve the performance of the company from there.
Okay, and just a question in Finland, this IPO market is very hot. You have more companies coming to the stock exchange than probably ever. How is it in US, and from your point of view, is it overheating?
So certainly the IPO market, as well as the special purpose acquisition market, another path to the public equity market, has been hot over the last couple of years. I think some of what has driven the enthusiasm for these new issues is what people have seen in the private markets, right? Frankly, some of the companies that we've been investing in that have 100 million or more in revenues, that may have as much as $1 billion in enterprise value, 30 years ago, those companies would have already been listed on the stock exchange. They would be small caps, and there would be public market investors who are investing in those. And what we've seen over time, as the private markets have developed, more of those companies are staying private longer, and more of their growth is going to private market investors like us. And so what that means is, for an investor, investor investing over generations or investing for their institution, the only way to get access to these companies has been through investing in a company like GPA. In a fund like GPA or in a portfolio like this. Now, public market investors see that, and as a result, they have been willing to buy into some of these companies that previously had only been accessible in the private markets. And that's been very good for us, because public market investors are often willing to pay more for a good story, for a good growth story. And we have a number of those in our portfolio. So we've been selling into that market, and we've been benefiting from some of that enthusiasm. In fact, while in this portfolio, we've only been investing in private companies, a number of those, 6 of them in fact, have actually gone public, either through an IPO or through a merger with a public company. And actually today, 8% of our fund is in those companies that have executed well, that have merged or gone public, and have grown from our value. And so we've actually benefited from some of that enthusiasm in the IPO markets over the last couple of years.
How about the other way around? Do you buy companies from listed markets and take them private?
We have as well. So we certainly partnered with some general partners who are buying entire companies or buying divisions out of companies that are listed. And what we've seen is that the enthusiasm in the listed markets has not been equal for all sectors and for all types of company. In particular, if there are groups that, even if they maybe have a market-leading product, if they haven't invested in growth, if they haven't shown discipline in keeping their costs down, and they haven't been able to deliver on the promises they made to investors, some of those stocks are going down, and we've seen very attractive values there. And in some of those cases, you can get a general partner to come up with a plan to fix those companies, to invest in growth, to exercise cost discipline, and then they become attractive to the public markets again. And we've had a couple of those in our portfolio, although it is a minority of what we've done.
Okay, yeah. Soon running out of time, but there's a question on when I was still speaking in Finnish, I talked about stagflation. Do you see the same risk? I mentioned that as a risk for the market, and if you said markets are, or investors are somewhat worried about that. How do you see it from the US point of view?
Yes, so certainly, we've been a long time, we haven't had to worry about inflation. We've been in some cases worried about deflation and worrying about the opposite. What we see in inflation and stagflation, it comes in different forms. In part, you see the rise in commodities prices, the rise of input prices, and then it kind of filters through into the rise in the prices that companies are able to sell for. And what you see when you see changing input prices and changing output prices, it can cause disruptions in certain industries. Products that used to be profitable and used to be very attractive, that the economics of those might change. And similarly, other things that might not have gotten as much attention, suddenly because of the differences in input and sales costs, could become more attractive. And so what we see is that our general partners are well positioned to take advantage of those dislocations. Certainly, they're more attuned to these movements than we believe some public companies, some very large conglomerates, or even some of the family-owned companies who've been doing things the same way for the last 20 years and may not have the resources to change it. And so while inflation, stagnation in the economy, it's not good for any company, we believe that the private equity companies are better positioned to adapt than some of their competitors in the listed markets or family-owned space.
That way. One final question from me. You mentioned that Hamilton Lane is a company. So should one invest in your fund or in Hamilton Lane?
So yes, Hamilton Lane, we are a 30-year-old company. We were founder-owned until 4 years ago. And as we transitioned from the founders to the new generation of leaders, we did go public. So certainly some people have looked at Hamilton Lane stock. We have invested in that. I will point out it's very different exposure than what you're getting in this fund. So in this fund, you've got exposure to 700 underlying companies in the private markets that are benefiting from all of the factors that I talked about. If you buy Hamilton Lane stock, you're buying an asset manager. You're buying a stream of fees and some profits that isn't directly linked to the private companies, right? In fact, a very small portion of our value, it comes from our investment in the private markets. Not only that, the Hamilton Lane stock is priced based on a growth multiple because we have been a fast-growing company. And so to the extent that there's a position for that in your public market investments, that could be fine, but very different from what you're getting in the Global Private Assets Fund.
So better to invest in both.
They meet different needs. So if people have needs for both, they can. If they just want the private markets exposure, then the GPA fund is where to get it.
Okay. Thank you, Michael. It was very enlightening. Kind of opened up many issues that I have been wondering, and our customers have been wondering about the private markets there, and also see the perspective from Philadelphia point of view, US point of view, when we are looking from Finnish point of view, is somewhat different on some issues. So thank you very much. Very interesting presentation. And at the same time, thank you Ilona. And erityisesti kiitoksia kaikille kuulijoille. Saatiin vähän erilaista esitystä tällä kertaa. Saatiin vähän maailmanmeininkiä tähän ja ehdottomasti saatiin erittäin mielenkiintoinen sijoitusmahdollisuus tuossa noin. Eli tässä kohtaa mä kiitän kaikkia kuulijoita ja toivottavasti hyvää syksyn jatkoa ensi kuussa jälleen S-Pankki-webinaari uusilla aiheilla. Siihen asti ei muuta kuin oikein hyvää syksyn jatkoa.